The analysis of the current uptrend is relatively simple. You basically could stay long with the indexes trading above the T-line. However, notice what happened today. They gapped up the trading and traded positive. That little alert, that gap up, told us you start watching for profit taking. Note that anytime you even moved a little bit away from the T-line, they would bring it back to the T-line. And because we're going into a 3-day weekend after a strong week in the market, it wouldn't be surprising to see some traders taking positions off the table, doing some profit taking. The NASDAQ provided the same scenario. A little gap up, starting to move a little bit away from the T-line. Not very much. All that really indicates is there might be some profit taking that will bring you back to the T-line, which implies you might have a couple of days of profit taking, but not anything that's going to change the overall trend of the market just yet. You still need to see a dramatic sell signal and a close below the T-line to tell us there's now a new change of investor sentiment. Utilizing the pattern, such as the J-hook pattern, provides a much stronger point of entry than just buying uptrending stocks. For example, we could see on iRobot, one of our recent recommendations, how when they brought it up, they came right back to the 50-day moving average. Note the hammer dojis at the 50, and then they brought it back up above the T-line. This indication right here was we should be heading in for a J-hook pattern, which allows us to speculate or anticipate that wave 3 was going to be the same magnitude as wave 1. This also allows for very common sense entry strategies, knowing that a pattern is setting up, that you can be buying after a pullback, knowing that the next move is in progress. That same scenario was applied to our recent recommendation on VNet. You can see how it supported right here at the T-line, wave 1, wave 2, and notice the breakout. There's our doji sandwich. Very simple strategy, 2 plus 2, which is the doji rule that if it opens positive, it's going to trade positive. If it trades positive, more than likely it's going to have the same magnitude move as this candle right here, which easily illustrates that when they break out, they're breaking out with this type of move, telling us wave 3 is now in progress. That 2 plus 2 analysis can be applied anytime you see a candlestick pattern. For example, look at our scoop pattern. A flat handle, then the scoop, and look where the buying occurred, right here at the 50 with a doji gap up bullish confirmation. But notice what it did today. Did a doji day. Makes this very simple. If it opens positive and starts trading positive, the doji sandwich is probably going to come into play. The magnitude of this candle is going to tell us they're well breaking out of this handle, which starts the slingshot effect of a scoop pattern, which tells you it's going much higher. Having this knowledge of knowing what should happen based upon the candlestick signals individually and applying that to a pattern allows the candlestick investor to highly enhance their probabilities of not only being in the right direction at the right time, but in trades that are going to produce inordinate profits. That'll be it. We'll see you in the chat rooms.